Welcome to the Legal CFO.
Hey everybody, welcome to the show where clarity meets profitability. I mean, it's already music to my ears. This is the Legal CFO. I'm your host, Mike Leon. I'm joined by Ryan Kimler, the founder of Net Profit CFO. Ryan, how you doing?
Doing well. Excited to be here today, be back, and talk about today's topic.
Well, I'm excited to talk to you about it because if you're a law firm owner out there that you're looking to get a handle on your finances, you really want to grow your bottom line and finally take control of your numbers, let me tell you something. You've come to the right place because in each episode of this series, Ryan's going to break down the business side of law with straightforward strategies, help your firm run smarter, earn more, and scale with confidence. So, Ryan, let's get started because in today's episode, I want to talk about trust accounts without the headache, about compliance and cash flow tips. And let me ask you a high-level question here. Why do trust accounts create so much confusion for law firm owners?
For sure. So I think the biggest thing is you go to law school, and a lot of lawyers here throughout law school don't mess up your trust account. Well, what does that mean, right? And unfortunately, like I've talked to a lot of lawyers, and they're not really trained on this is how you keep a trust account. And unfortunately, we're asking lawyers to do accounting, right? Which is probably not in their wheelhouse. It's not in their expertise most of the time. And so trust accounts can bring a lot of headaches to law firms just because you are responsible for it. Your license is dependent upon it, that you're, keeping the appropriate funds in the account and that you're taking care of your client's funds in the way that you're supposed to, but it's not your expertise. Right. And so that just creates a whole whirlwind, whole big storm of problems sometimes.
Yeah. And that's why they come to this video to find that stuff out. So let me ask you, Ryan, what are the most common compliance mistakes that firms make with trust accounting?
Probably some of the most common is all around just not having the right and proper documentation all the time. We really want to document all the deposits in, any checks that are written and or withdrawn out, any transfers that you make, really just keeping a close eye on it. There also could be bank fees that are taken out of your trust account. Most banks are not supposed to do that. However, I have seen it multiple times that banks end up hitting your trust account with fees. It is your responsibility to replace those. So just documentation helps you prevent a lot of the most common mistakes, and then just tracking, right? And making sure that that client ledger is up to date with all of the most recent transactions that have happened. If they've made additional payments lately, make sure that those are in there. If we have, put additional bills on their account and we've taken payments for those, make sure that is accounted in there. Just tracking and documentation. Biggest things, a lack of those will lead to a lot of problems and a lot of mistakes. And so just having those in order will help you prevent a lot of the most common mistakes.
Good to know. And Ryan, you were mentioning before about how lawyers are not accountants, right? So how can a firm stay compliant without feeling buried in the bookkeeping aspect of this?
The best system that I always use with my clients and like to have them set up is you do need to work with an accountant. And while you as the lawyer, you are responsible for making sure that everything is reconciled, working with that accountant, having the accounting firm build a ledger while you simultaneously build a ledger, ideally in some sort of practice management software. There's a lot of them online today that you can really leverage, but you have a ledger, your accountant has a ledger, and at the end of each month, you should be looking at those two ledgers and comparing them side by side, making sure that everything is the same based on the bank activity, making sure there's no discrepancies, that you both basically come up with the same answers. It gives you checks and balances. And by kind of separating the duties, so to speak, if you make a mistake in a ledger or maybe you miss a bank fee or something like that, ideally your accounting firm is going to catch it, right?
Right.
And then hopefully, and probably really, really rarely, if your accounting firm makes a mistake or they miss something or assign something to the wrong client, then your ledger catches that mistake, right? Versus if you're just working alone and you're keeping a ledger and you're keeping up with the bank activity, if you make a mistake, like let's say you make a mistake on a transfer amount or something like that, the likelihood of you being able to catch that yourself is probably very slim, just because we all make mistakes and it's hard to catch when there's no checks and balances there.
Well said. We all make mistakes, right? That's why they get the information from you, Ryan. Here, let me ask you, what impact? I was thinking about this as you were talking. What impact do trust account practices have on a firm's cash flow?
So trust accounts can be really, really powerful, and in my opinion, they're probably not utilized enough. Probably out of fear, right, of messing it up and possibly risking your license, things like that. But if we can get a system down where we're collecting a good number of retainers, we're collecting money ahead of time, it really cuts back on the number of clients that you have to chase down to pay their bill, right? And so not only from a cash flow perspective, do you have the majority of the bills paid and you have, your majority of your clients don't owe you money, but also from a time perspective and from a staff perspective, nobody has to spend time trying to call those other clients that owe you money and track down payments. Or if you put people on a payment plan and you take their credit card and then all of a sudden 3 or 4 months down the road, the credit card fails, right? Maybe account number got changed or it expired, or, there was fraud on the account, so they had to close the account. Things like that happen. So being able to leverage trust retainers and the trust account really, really can help boost your cash flow and have you have the majority of your bills paid before you even have to make any calls or send out any bills. You can have the money sitting right there to pay for the work.
I think you were mentioning before about the managing partners at the firms. So what should a managing partner look for in like a monthly trust account report?
Your monthly trust account report and then this does vary by state. Different states do have different requirements, but in general, I want to see, and the managing partner should want to see, what is our bank balance, number one, to close out the month. And on that report, you should be able to look at that number and then go to your bank statement and see that those two numbers are exactly the same, right? For month end, when your bank gives you a monthly statement, those two numbers should be the exact same. And then you want a breakdown of that number. So I'm just going to use round numbers. Let's just say that there's $100,000 in your trust account. You want a breakdown of what clients have money in the account and how much per client. So client A has 5,000, client B has 12,000, client C has 10,000, etc. Right? All the way down the page. And those individual client balances should add up to your overall total. Like I said, maybe it's 100,000 even. And that should match your bank statement. And then what I also want to see, if there are any deposits outstanding. So in other words, usually if you're taking credit card payments at your law firm, if somebody pays you on the last day of the month, most likely they've paid you, but it is not in your bank yet. Usually it takes 2 or 3 days to process, right? So that would be what I would call a deposit in transit. I want to see that on my reconciliation that's listed out as funds that are coming into the account that haven't hit the bank yet, right? I also want to see any checks that are outstanding. So if we've written a check to a client or printed a check out for a client, or a provider, or another of counsel or something like that, and they haven't cashed that check yet and it's still outstanding on the bank account, I want to see that check in a section as well. So we have our total bank balance, all of our client balances, outstanding deposits, outstanding checks, and all of that should sum together to get down to what's owed to clients should match what's in your bank.
Let me ask you, because I think we haven't really touched on the software that's being used by some of these folks like Clio or PracticePanther. Can you kind of explain to our audience how these help simplify trust account management?
Your best practice management softwares, that you're using for your case management, you're keeping all your case files and documents in there, but a lot of them also have places for you to keep a ledger for your trust account. So that ledger is going to help you track the monies in and the monies out for that specific client. And so Pretty much all of those online, softwares that you just talked about, Clio, PracticePanther, they are going to have reports that you can pull right out of the software that, as long as you've updated all of your transactions, you can pull reports directly out and look at your entire ledger and or you could filter by specific clients and you could look at a specific client ledger. So having that software and having it updated and using it in the right way really streamlines the reconciliation process from the lawyer side of things, right? Or from the law firm side of things, I'll say, right? I still recommend having that accounting firm to work with and keep their ledger, but you should keep your ledger in that online software, and you can absolutely pull some great reports out of there that's really going to streamline your reconciliation process at the end of every month.
Ryan, you mentioned the P word with process. I want to turn to another P word, profitability. When does trust account management start to affect profitability?
Again, if we can get you to a place where the majority of your payments are you're collecting those before you're even sending invoices out, right? You might have, like, let's just say your law firm has 50 bills for the month. If you can have 40 of them paid out of your trust account, that makes a night and day difference for profitability. According to Clio, they do a practice study every year. They study over 80,000 law firms and they put it all together in a report. The average collection rate, I believe, in last year's report was around 84% for most law firms. So sounds pretty decent, right? But there's 16% in there on average that's not collected, right? And so if you can close that gap, right, and you can have 90% in your trust account, 92%, 94%, you're already going to beat the industry averages. And 16%, of a collection gap might not sound like a lot, but most of the time, that 16% is direct to profits. Because most of the time, if you're operating well, you have already covered all of your bills. You've already paid your people. You've invested some money in marketing. And so that additional 16% is probably going directly to the bottom line and improving profits.
84, you mentioned 84. That's like a B student, right? You want to get to 92, yep. 93. That's like an A student for people out there. I was thinking of that as you were saying it, Ryan, because I was a B student, right? So let me ask you, Ryan, for people watching this, how do you specifically help firms fix these long-standing trust accounting issues that they have?
Yeah, great question. So sometimes it is a very extensive process, right? The one big thing with trust accounts is if you make a mistake, let's just say a mistake was made in your account back in 2020. If you're not looking at it monthly and you're not really reconciling your account, that mistake is going to carry forward into the future and it's going to affect your balance into the future. And so sometimes, in order to really work out all of the mistakes and really figure out what went on in the account, you have to go back many, many, many years to really figure out, well, what happened? How did we get off from the balance that we should have had in the account for our clients? And so that is absolutely work that my firm and we help law firms kind of go back through their records and figure out. I really call it forensic accounting. It's a lot of detailed research. It's a lot of digging in, figuring out where did we go wrong. And sometimes, like I said, that does carry for many, many years, right?
Right.
Unfortunately, sometimes I have run into some situations where, again, I really preach to people, keep really good records because, if you go to your bank, they probably have the last 7 years. But if you have had your trust account longer than that and you have a mistake prior to that 7-year mark, it's going to be almost impossible to figure out and unravel because we don't have access to the documentation. We don't have deposit images. We don't have check images. You might have bank statements of, from the bank of here's the checks that cleared, here's the deposits that cleared. But if we can't assign those to clients, it doesn't do us a lot of good. So again, I really, I talked about it at the beginning of this episode, but documentation is super critical. Don't be relying on your bank. They're not going to have all of your records. And so Sometimes it can be a process. Sometimes we get it all figured out. Sometimes we don't have the materials to, and that can be a tough situation to deal with.
Records keeping, records retention. You don't got to tell me twice, Ryan. I always save all my stuff. So let me ask you before we let you go here, what is your top advice for a firm that maybe they feel overwhelmed by compliance?
Yeah, absolutely. I think top advice is hire some expert help, right? You've got to find some professionals that you can really put in your corner that are experts at the accounting. And, I think the sooner the better, especially before your trust account balance gets really, really big. Just having a professional there, again, to have that separate ledger, kind of be checks and balances with you. Maybe you can find some accountants that'll kind of work that ledger and work it just on an hourly basis if you're budget conscious, but really finding some good professionals that know what they're doing, understand the trust accounting rules, and getting that help and that support in as soon as you can, so that you have a little bit more peace of mind. Again, it's always going to be your responsibility as the lawyer, because it is your license, but having some peace of mind and some backup and kind of some checks and balances probably makes you feel better and sleep a little bit more at night. So, get that professional in as soon as you can. And then, like I've mentioned, document as much as you can, make sure that you're keeping good records, and really reconcile on a regular basis. Really every month you should reconcile and know, again, the balance in your account and what clients make up that balance. That should be a monthly process for you, so that things don't get out of hand. Again, mistakes do carry forward. So if you're not looking at that on a monthly basis and you haven't done it in a year, now you've got 12 months where a mistake could have happened, right? Mm-hmm. So keep your time frame shorter, and that's going to narrow your window of how much you have to go back and review and see if there was a mistake made.
Great insight, Ryan. I can't thank you enough, man.
Absolutely. Thank you for having me.
Yeah. Thanks for watching The Legal CFO. That's Ryan Kimler. And if you're ready to get financial clarity for your law firm, do me a favor, visit Net Profit CFO.com. Don't forget to like, follow, leave us a review. The more you know, the more you grow. I'm Mike Leon.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.